Well, that's nothing short of some shocking stuff happening in the market. I'm going to show you guys some stuff here today. Oh my gosh, okay? And Billy, watch out, okay? That's all I'm going to say about that. So the Russell up about 0.9% here today, which means my hair had to go up apparently. So yeah, the Russell's up 0.9% here today. Having a decent day, right? That's not amazing. Like that's respectable. Like, hey, a 0.9% day, okay, all right. Well, yeah, what we're going to go through here is just absolute, like, ridiculous rises in stocks with just a Russell 0.9% move here today. By the way, all the screenshots I'm showing you here today are from the Hungry Bull app. If you haven't downloaded the Hungry Bull yet on your iOS and Android store, do so right now as I speak to you and I share this video with you here. This is how to track your stocks, cryptos, keep up with the markets, keep up with news in relation to the markets, in relation to your stocks, do research, listen to earnings calls, all inside the app, and so much more, okay? So, look at that. A 0.9% move for the Russell, the small caps here today, right? Look at Avant Brands up 21%. Look at Alibaba, which isn't a small cap company, but it is seen a little more as a risk on play, right? Up over 10% here today. Lemonade, a small cap company, 10% move. BYND, Beyond Meat, small cap, right? SDC, small cap, 7% and 7% there. Fobo TV, another small cap, up almost 7%. And this is all off of a 0.9% move in the Russell? Like, think about this for a moment, guys. A 0.9% move, and you got stocks out here moving 10%, 7%, 6%, 6xing, 7xing what the market's doing here today, if not more than that, right? This is unbelievable. Look at Teladoc here today, which isn't, it's kind of in the Alibaba group where it's not a small cap, but at the same time, it is seen more as a risk on type place. Teladoc up almost 6% here today. Stitch Fix, which is a small cap company, up 5.7% here today. Maxar Technology is a small cap company, up about 5% here today. GoodRx, up 4.8%. Honest, up 4.5%. Palantir, kind of seen as a risk on its cousins with Teladoc, I call it. Palantir up 3.8% here today. You have Square up 3.7%. Revolve, a small cap company, up 3.6%. Corsair, a small cap company, up 3.5%. Oatly, up a small cap company, up over 3%. Tattooed Chef, a small cap company, up 3%. And you just look at these moves, move after move after move, and it's just, these are epic. You know, nothing short of epic as far as these moves here today, all off a 0.9% move in the Russell. Think about that for a moment. Imagine what would have happened if the small cap indexes were up 2% today or 3%, right? And it was like, oh man, today's a great day. What would these stock prices have been up today on a day like that? If it's up like this on a 0.9% move, think about that for a moment, right? Now, the contrarian indicator, which I call WBA, Walgreens stock, which is a stock I own, this stock has seemed to do phenomenal whenever all these sorts of other stocks are down, right? And you know, Walgreens will go up on those days. And here we are today with a day like this where you got all these stocks going crazy, and then Walgreens is down 0.06%. So Walgreens just seems to be kind of, at least right now, I don't know how long that lasts, it seems to kind of be that contrarian indicator for the market where, you know, whatever the market does, Walgreens seems to be doing the opposite, at least as of right now, right? Now, there was something really interesting that was done a while back here, earlier in the year. In search of the origins of financial fluctuations, the inelastic markets hypothesis, okay? And yeah, I know that's a mouthful there, done by the National Bureau of Economic Research. And what they're found, you know, there was a lot of things they found. One of the things was using the recent method of granular instrumental variables, we find that investing $1 in the stock market increases a market's aggregate value by about $5. We also develop a new measure of capital flows into the market consistent with our theory, okay? Now, the reason this is important, and by the way, just to point out here, another gentleman named Michael Burry brought this up earlier in the year. You know, Burry tweeted a link to this actual research report, which found U.S. stock market's value rose by $5 for every $1 invested in it. So it's not a perfect $1 to $1 ratio if you're thinking about outflows or inflows, right? The Scion Asset Management chief noted that the majority of millennials are in passive vehicles such as index funds to buy stocks, meaning prices could become even more stretched. That 5-to-1 ratio will get much sillier, he says, over time. You know, Billy's silly type stuff, product of paradigm. So when you see something like this, I think it's really, really important. Like what does all this mean essentially, other than, my gosh, my hair is just something else today, okay? Well, the way I think about this is why you see these stocks get way overstretched valuation-wise, and this is why you see stocks get hammered way too much to the downside, right? Where it's like, really, this stock is trading at like silly valuations, right? Like, it doesn't make any dang sense. And I think this is a big part of that reason. Because if you have outflows of money and it's not a perfect one-to-one ratio, and it actually can be 5, right? And then look at a lot of these stocks that folks have been, tax loss harvesting in recently, right? Which is a lot of the small cap stocks. And that's been going on for the last 2 months, right? If people are selling those and outflowing money out of those, right? Well, then that could be a situation where, these stocks just get hammered so much more, because if $1 is not equal to $1, it's really equal to $5. Think about that for a moment, right? And think about the money that's outflowed out of, like, let's say ARK ETFs, Kathy Wood's, ETFs there and things like that, right? At the ARK funds. And so when you start to kind of think about all this for a moment, and you just kind of, you sit there and you just think about it, and you're like, wow, now it makes sense why some of these stocks can go down 60, 70, 80%, 90% in a matter of, 6 months. Like, it happens so dang fast. And you can also get things to flip the other way. And you see on a day like today, and this is why I say it's game over, Billy, because the short sellers are Billy, okay, and they've piled into all these stocks very recently here into max shorting these stocks, right? I pulled up the list many times on the channel recently, and we've looked at that, right? And they've max shorted these stocks to the max, right? And what happens? Let's just say hypothetically, what happens if the Russell just goes up 10%, not something crazy, just 10% next year? What do we think is going to happen in these sorts of stocks? Like, well, what does that mean for movement in these sorts of stocks, right? Never mind if that 10% comes in a matter of a few months, which, if you watch the Russell, like, the Russell can move 10% easily in a matter of a 3-month span. It can move that much in a 2-month span. Imagine something like that, and imagine the short covering that has to happen, and imagine the short squeezes that would happen on the back of that, right? Look at what happens on a day like today. A 0.9% move, and you got this stock up 3%, 5%, 7%, right? On a 0.9% move for the Russell. And so if you're a short seller out there, you're basically banking for the Russell and small caps to continue to go down in 22, right? It's always a possibility. It's just not, things just aren't on your side. And the thing is, when you look at a lot of these stocks, even as all the tax loss harvesting has happened, and, some of these stocks have held up pretty decent. Corsair, for instance, has held a stake in the ground in the $20 range. If you look at Tattooed Chef, that has stayed strong in the 15 to 16 range. And you look at a lot of these stocks, they're holding decent. The shorts have tried to get them down more and more, and it just seems like those stocks are kind of hanging out. And as soon as you get some positive momentum going on the other side, never mind if you throw in a respectable earnings report come January, February for a lot of these companies, and then another one come April, right? The moves you can get in these stocks in a quick amount of time, you can get these stocks to move 50, 100% in literally a snap of fingers. And this is why I say it's game over, Billy, because they're on hopes and prayers now at this point in time. They're on hopes and prayers. If you're shorting some of these stocks, max shorting, you're on hopes and prayers, just flat out honest truth. And you're hoping to get that last lemon squeeze, okay? You're hoping to get that last lemon squeeze. And a day like today, this is a warning shot, okay? That's all I'm gonna say. This is a warning shot. Us longs, it doesn't mean anything to us. Like, if those stocks go down 5%, we've already had so much pain we've had to deal with over the last several months. It's like, who cares? Like, to us, it's nothing, right? But to a short seller with an infinity loss, right? We know the stocks we're investing in, we know they're not going to zero. We know that, right? They're great companies that have great futures. We're just waiting for the market to catch up with these great futures these companies have, right? And the great balance sheets and the great stories and the management teams and all sorts of things, right? In a day like today, this is a warning shot for the short sellers. That's all I'm going to say about that. This is a warning shot, and short sellers could take this day like today serious and maybe rethink some things, or they can not, right? And be like, oh, they're not really going to shoot. Okay, we'll see. Anyways, guys, much love as always, and have a great day. Peace.